Welcome to The Explainer, where we turn complex data into some really clear insights. Today, we're going to dig into what the prediction markets, the wisdom of the crowd, are telling us about the year ahead. All right, let's get right into it. First up, we'll hit the economy. Then, we'll jump over to the political power plays, check out tech's next big bets, and look at the global risks on the radar. Then, at the end, we'll pull it all together to see what it all means. So, what's the big story for the economy? Well, it turns out the markets are feeling incredibly confident about one particular outcome. A staggering 92% probability of a soft landing. That is a huge vote of confidence. It suggests that pretty much everyone believes the major economies can get inflation under control without crashing everything into a nasty recession. This right here, this optimism, it's kind of the foundation for everything else we're about to see. But when you start to peel back the layers, the picture gets way more complicated. That big headline number sounds great, but the details underneath, well, they show some real tension. Okay, and this is where it gets really interesting, because there's a contradiction here. The market is betting heavily, a 68% chance, on exactly 3 interest rate cuts. That should boost the economy, right? But at the exact same time, it's saying there's a 56% chance that inflation stays stubbornly high, above 3%. Those two ideas don't really play nice together. It tells us that the road to that soft landing might be a lot bumpier than that 92% number makes it seem. If you find this kind of data analysis valuable, go ahead and drop a like. All right, so let's take that economic picture and see how it fits into the political arena, because the data is pointing to some pretty big shifts coming up on the horizon. So, in the U.S., the market is forecasting a pretty significant political shift. It's giving J.D. Vance a 32% shot at winning the next presidency, putting him ahead of Gavin Newsom at 22%. And looking even further out to 2028, the probability of Vance being the Republican nominee jumps to 53%, way, way ahead of Marco Rubio. This suggests the market isn't just seeing a single election outcome, but maybe a bigger, broader political realignment. Now, on the world stage, it's a real mixed bag of potential breakthroughs and simmering tensions. There's a strong 58% probability being priced in for a huge deal between Israel and Saudi Arabia to normalize relations, which could totally reshape politics in the Middle East. But that optimism just doesn't carry over to global trade. There's almost no confidence in new U.S. trade deals, and there's a pretty noticeable 25% chance that China slaps new tariffs on U.S. cars. That's a serious point of potential friction for the global economy. Okay, let's pivot and talk tech, because this is where the market is placing some really confident bets right alongside some that are, well, super speculative. We're always tracking these fast-moving trends, so for more updates, be sure to follow us on Twitter. In the big race for AI dominance, the market's opinion isn't even close. It's an absolute landslide. It's giving Google's Gemini a massive 73% chance of being considered the best AI by the end of 2025. Look at ChatGPT, a distant second at just 15%. This is a huge bet on one company just running away with the whole thing. And this just hammers that point home, a 92% probability for the release of Gemini 3.0 this year. Now think about that for a second. That's the exact same level of confidence the market has in an economic soft landing. The crowd sees these two things as pretty much equally certain to happen, which is just wild to think about. But then, in sharp contrast, you jump over to crypto, and it is a completely different world. It's still so much more speculative. Yeah, there's a ton of chatter about a bull run, but the market is only giving Bitcoin a 33% chance of breaking past a new record high of $130,000. That's a universe away from the near certainty we're seeing in AI. Okay, so beyond the stuff that's likely to happen, the data also lets us peek into what the crowd thinks about major global risks. The low probability, but super high impact, outlier events. So here's a question that, given everything we hear about global warming, feels like it should have a really obvious answer. But nope. Surprisingly, the market is only giving this a 6% chance. And this is so fascinating because it's a real contradiction. It suggests the wisdom of the crowd isn't just looking at the long-term warming trend. It's probably factoring in short-term climate cycles, like the predicted shift from a warm El Niño pattern to a cooler La Niña, which could actually bring down the global average temperature for a bit. It's a great reminder that these markets can capture some really deep nuance. And this skepticism, this feeling of probably not, extends to other massive events. A catastrophic 8.0 earthquake, just 6%. The US government finally confirming aliens are real, a 5% long shot. And what about Tesla doing a 180 and making a gas car? Also just 5%. The market is clearly treating these world-changing events as extreme long shots. Hey, if you know someone who'd get a kick out of these predictions, make sure you share this with them.
So, what does this all mean when you put it all together? Let's try to connect the dots and see the bigger story the data is telling us.
Okay, so the most important point, the real anchor for this whole forecast, is that incredibly high confidence in economic stability, that 92% soft landing number. It's really the foundation that all these other crazier predictions are built on.
So here's the big picture. You've got this remarkably stable economic foundation, with that 92% confidence in a soft landing acting like an anchor. And that stability is what allows the market to price in all this major volatility in other areas, from political shakeups and global friction to the massive disruption coming in AI, without predicting a total meltdown. The optimism in the economy is basically the buffer for all the uncertainty everywhere else. We do deep dives like this all the time, so definitely subscribe to the YouTube channel so you don't miss our next one. And all of this leaves us with one last really big question to chew on. Are these markets just holding up a mirror, reflecting what's probably going to happen? Or does their collective belief, that 92% confidence, for example, actually change behavior and become a self-fulfilling prophecy? It's something to think about. Let us know what you think down in the comments. Thanks for watching.